the bank sector is something to watch because if that happens, obviously, some people will think, gosh, the metals will go down because, the market's going down. Go back to March to May of last year and the crash in banks. They went vertical. Okay. I think that next snap we get in the stock market, led by the banks probably, that's when the gold and silver will wake up because they are monetary metals. Okay. And they respond to central bank panics, monetary flows, artificially lower rates, et cetera. That's the fuel behind the monetary metals. And I think at that point, probably sooner, we'll start to see both of the metals firm back up.
As the precious metals market enters a crucial phase, gold prices edged slightly higher, while silver saw a minor dip in early U.S. trading on Friday. This pause in market activity comes as traders cautiously await the next significant fundamental event that could drive price action, potentially stemming from weekend geopolitical developments or upcoming U.S. inflation data. MichaelOliver, founder of Momentum Structural Analysis and a respected financial analyst, offers a unique perspective on the current state of the precious metals market. Oliver argues that gold has been in a bull market since late 2015 and is now entering what he terms the acceleration phase, which he believes began in late March, breaking out of a congestion zone that had persisted since 2020. Supporting this bullish outlook, Mike McGlone, a prominent market analyst, advises that, in the current environment, being underweight risk assets and overweight risk-off assets like gold and U.S. Treasury long bonds is prudent. McGlone boldly predicts that it's a matter of time gold gets to $3,000 an ounce, potentially meeting the S&P 500 at that level. Oliver's analysis extends to the silver market, drawing parallels to its behavior in 2010 and 2011. He notes that silver often experiences sharp pullbacks before significant upward moves, a pattern that may be repeating itself. Despite recent underperformance compared to gold, Oliver maintains an optimistic outlook for both metals. This optimism seems justified as silver recently snapped a three-session losing streak, rising 1.2% in the European session to trade at $26.93 per ounce. The silver-dollar pair is finding stability as the market repositions itself in anticipation of potential interest rate cuts by the Federal Reserve. Many analysts attribute the sharp declines witnessed across the board this week to panic-driven correction, rather than concrete recessionary indicators. Please tune in for our exploration of MichaelOliver's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
We argued back in late March, based on annual momentum of silver, gold, and the gold miners at price levels that are below where we are now. Okay. That the zone of congestion that we'd been in since 2020, where we'd gone up and down in gold, basically sideways, and silver had descended in a channel, and so had the gold miners. That was over with. We're resuming the bull market that actually began in late 2015 for gold and related markets. Yes, it had a 3-year pause. That happens in major bull markets. Even this one you're looking at now, we're looking at the final 3/4 of a year of the bull market that already began in 2000, from lows in the year 2000. So we're looking at what I call the acceleration phase at the end of a already protracted bull market. Again, our bull market, we argue, is underway since late 2015. Gold was 1,050 at that time. And we think we've entered the final several quarters of the we call the acceleration phase. Now, this is the silver price action back during that time. Back in August of 2010 and September, as silver moved up toward $20, we broke out enough long-term momentum metrics to argue that the acceleration phase was commencing. And sure enough, you had a nice move. I mean, silver went from like $17, $18 up over 30. Similar prices we have now. And then you'll notice the little red lines I've plotted under these pivotal lows on price. So if you're a price chartist, you see this ascending pattern. Well, obviously, when you broke that last red horizontal, you said, oh my gosh, we're a negative zigzag. And so no doubt a lot of people were stopped out and the market got washed out. It dropped from like $32 down to about 26, okay? And spent a couple of weeks down there spinning underneath that last point of breakage. I've circled that level. But it looked negative if you looked at the price chart, that is. But that was a cleansing. It was the cleansing prior to the real vertical portion of the move, which was just a matter of about 3.5 months from late January of 2011 through mid-April of 2011. Silver went from $26 to 50. Boom. But before it happened, it did have that cleansing break. So we suggest that we think we're in that similar situation right now with silver.
Oliver employs a blend of price action analysis and momentum indicators in his approach, with a particular focus on long-term momentum metrics and key price levels. He also examines the correlation between precious metals and other sectors, notably the banking industry, to inform his market decisions. Despite a convergence of factors that would typically be bearish for gold, the yellow metal showed impressive resilience on Thursday, posting solid gains. This strength in the face of economic data and market dynamics that would usually pressure gold prices suggests that the recent price correction may be approaching its conclusion. In the past few weeks, gold had retreated from its August highs near $2,500 per ounce, causing some to speculate that the metal's strong rally, which began at the start of 2023, might be losing momentum. However, the recent rebound amid challenging conditions indicates that gold's correction phase could be drawing to a close, and the market may soon see a resurgence in its upward trajectory. Let's get back to the interview.
Late 2022, you had this washout that carried down close to 1,600. Everybody thought it was all over, going to big bear market. And we argued, no, it was a bear trap. Silver at that point in time was down to just above 17 at its low. And looked like heck. Okay. And then we surged up out of that low and leveled off in early 2023. In fact, you'll see that spike in silver starting in March. It was about $20. It shot up over 19 something, shot up over 26. That was the time of that bank collapse I talked about. Now go up to the gold chart above. You'll see how it did. It also shot up during that period, during the bank event. And then it went sideways, but firm until early this year. Now there was the surge, the acceleration phase measured by annual momentum again. We argued occurred in March. And you'll see the gold here. In fact, in price, you could see it as well. It shot up over 2,100 and bolted by April. You made a peak close in the above 2,400. That's where the little horizontal red arrow commences at that peak close in April. At that point onward, both metals went into a congestion type process where they were both up and down. In gold's case, it's more or less lateral. If you scroll down to the silver chart, you'll see that its peak in April, peak weekly close that is, was vastly surpassed in May. While gold basically stayed contained below its May peak, silver shot well above it. Silver is what we call a wild dog. And if you're in silver, you have to realize it's a wild dog. In other words, it's got a leash and it's attached to gold, but it's both much stronger than and often seemingly much weaker than. And of course, it was much stronger in that May surge where silver went 10% higher than it had been in April, whereas gold basically stalled at its April high. Now, you can see that the current action, this is through this week, down under 27 even, is below where the April peak weekly close was. We lived above it for a while. Now we're below it. Okay. Now scroll up to the gold chart and you'll see that it's basically at it. So gold's really more sleepy, but it's steady. Now, by the way, last week's close on gold, that was the new high weekly close. And right now, trading where we are at the moment, we're down about 3% below the peak weekly close of history. And yet people think, oh, gold and silver collapsing. Okay, silver is seemingly. Gold is yawning, okay, despite the stock market debacle. But I've circled the low in 2022 and the recent high in gold. And I've also done the same on silver. And I want to read you a number. Though silver looks weak, okay? But from that low to the high, gold went up 54%, silver went up 89%. And even at the current level where gold is right now, as we do this interview, it's up 49% from that low back in September, where silver's up 56%. Yes, silver is a wild dog, but that's the way it behaves. Now, we argue that if you flip up out of here again, and I think we will, silver will be the wild dog on the other end of the leash, pulling gold up. It will be far stronger than gold. Right now, it's weaker than gold over the last month, especially. But that's the way silver behaves, unfortunately or fortunately.
With the potential for significant price movements on the horizon, market participants remain alert to any developments that could trigger the next major trend in precious metals. As Oliver and other analysts suggest, the current market conditions may be setting the stage for a substantial rally in both gold and silver, making this a crucial time for investors to closely watch these markets. Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.